Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button and ring the bell so you don't miss one of our daily videos with successful real estate investors. Our guest today has been investing aggressively in the Hamilton, Ontario real estate market since the age of 23, with a process that evolves from transaction to transaction. He is currently focused on multifamily BRRRR deals while slowly testing the waters in the Airbnb space. He also works as a mortgage agent with Synergy Mortgage Group. Jacob Perez joins us today. Welcome to Purchase to Profits. It's great to have you on the show.
Thanks for having me.
Yeah, I'm really looking forward to this. So to kick things off, do you want to tell our viewers what your real estate goals are?
Sure. I think real estate goals are kind of like a tricky thing because they kind of evolve all the time. I think a goal I had for myself at this age when I was 23 is completely different than what my goals are now, kind of thing.
Sure.
So I think when I first started, the goal was I want to buy my first investment property. You do that, and then, all of a sudden you have the itch and you want to do more kind of thing. So once I got a few properties under my belt, it was always just an evolution, transaction to transaction. So if I wanted to get one property, I wanted to get two. Then I thought, 5 properties was a good amount and I would kind of stop there. So then, I did 5 properties pretty quickly, realized that, hey, I want to take this thing to like 40, 50 properties, something like that. One of these big kind of monumental type portfolios. But I think kind of as you go along, you take on new projects and you start to value different things. So about a year ago, I became a mortgage broker, and that business has been extremely successful and extremely time consuming. So now I'm really looking at things where it's not so much about a certain net worth or a certain property goal, cash flow goal. Right now I'm looking at what kind of lifestyle do I even want to live? Because that's the challenging thing, because I figure, I could maybe double my mortgage business this year, but what will that do to my investment goals? And if I focus maybe exclusively on investing, how's that going to affect my current lifestyle? Because a lot of us know that with investing, we often don't see the fruits of that labor till a lot later. So I think like most real estate investors, once you've grown to kind of like a decent nest egg of property, it's really about, okay, I'm really just a good amateur. I'm a good amateur investor at this point, and I want to be a professional. And I think to be a professional, you have a predictable system in place. And for me right now, it's about building a system and process that allows me to be a little bit hands off while still maybe moving with more velocity than I have previously in the business.
Yeah, for sure. And I think you mentioned the key thing with systems. I interview a lot of investors, and it seems the ones that really take off with their portfolio and can systematize it, those are the guys and gals who are, who've really skyrocketed that wealth because they have that repeatable system over and over again. So, as you're building your portfolio, I know you don't really have a set, dollar volume or unit count. How do you stay on track if it's not crystal clear with, I want to acquire 10 new properties this year? How do you stay on track and stay hungry?
Yeah, I think it's really just, I look at everything with the lens of, I came from an immigrant type family. My parents came from Morocco. So, my dad did 20, 30 different business ventures before they had any type of viable business, and they always have so many stories about missed opportunities of the past years, or when they were 20, McDonald's franchises were $25,000, just different deals and opportunities they missed. Right. So kind of the way I look at real estate is, I'm still in my 20s. I'm a single guy. I'm lucky that I'm healthy. I have a lot of time to pursue this. And I just kind of look at it with the lens of, it's my responsibility to really max this out as much as I can before my time starts getting taken away from me by things that are a lot more important than money, having a family, things like that. So for me, it's really just, it's a responsibility to my future family when that comes one day, that, I really gave it all I could during the times where I could be as hands-on as possible.
Yeah. And as you're starting to implement systems into your business, have you had any systems or strategies that you thought would work out really well, but ended up tanking?
I think that it's funny. So I don't know if it's a system or strategy, but I've always found, looking back on my deals, that the deals I felt the best about were generally my worst deals, and the deals that made me sick to my stomach were my best deals. So I think it's kind of you always think with two different parts of you. You either think with your head or your gut, right? And I'm the kind of person where I think heavily with both, and sometimes they conflict. My gut really likes a deal, or my gut really doesn't like a deal, and my head likes it or doesn't like it. So what I've kind of found with my investment decisions, and maybe it's counterintuitive how other people feel, but for me, I just go with my head. My head has always brought me to better decisions than my gut. So when I'm walking through, a 4-unit property that's gross, the tenants are scary, but my head goes, oh my God, the numbers on this building could be so much better if you just put your hands down, evict a few tenants, do whatever you have to do to raise the value. But my gut's afraid of that, maybe, right? So I think it's the one thing that I kind of learned once I think I did 4 or 5 properties was, just listen to your head, look at the numbers, and that's going to be a lot more impactful in your gut, because you could be not liking a property because you got in you had a bad day at work that day. There could be a lot of other external factors that are affecting your gut. So I think just looking at the numbers on paper, and the cool thing now is whether you have a lot of experience with your own deals or you're looking at new avenues like Airbnb or things like that, a lot of the data is readily available. So you really can't lose with these investments, it seems like, if you're really just paying attention to the numbers.
Yeah. And would you say you have a set system now that you use to underwrite a property to kind of keep your head at the forefront rather than your gut?
Yeah, I think so. I think it's really just because there's 2 different things, right? There's doing deals with investment partners, and then there's doing deals with your own money. And I don't want to act like the investment partners maybe I'm not picky on their type of deals, but generally, like, if it's my own file, if it's my own money, I want to make sure I'm doing a BRRRR transaction where I can buy it, do a renovation, and not only recover my renovation funds, but also raise the value enough to get my down payment back so I can keep going. Okay. Yeah. Whereas if it's an investor, they have their own risk appetite, and they might not want a property with suspect tenants that requires a lot of renovation that might have some surprises. So maybe with those type of investors, I look at something where I say, maybe I want $200 of cash flow per door in the property, or $250 or $300, whatever it is, depending on the market. So maybe if I'm looking at a market like London or Windsor, Ontario, which are, for the people watching outside of Ontario, smaller markets, maybe I want a bigger degree of cash flow in those markets, but something closer to the GTA, I'm willing to accept a lower cash flow.
Yeah. And you mentioned bringing in money partners. How has that really affected or scaled your investment business? What was it, a big game changer once you did that?
Yeah, it was a huge game changer. So, the first time I came across joint venture partnerships was reading that book by Don R. Campbell. I think it was after I bought 2 properties. I found it in someone's basement. They didn't even know what it was. I asked if I could borrow it. They said, sure. And I read the whole book. And I remember learning the concept of like a very straightforward 50-50 joint venture. And for those of you listening who maybe don't know too much about that, the really quick textbook template is: investment partner puts in down payment, 20% down, and finances the property. And there's a managing partner who essentially manages every single thing involved in the deal. And they essentially split the appreciation 50-50, the principal pay down 50-50, and the expenses 50-50. And that original investment partner always keeps his investment, which is the down payment. So when I learned about that, I thought, oh, this is hilarious. I'm definitely going to do it, right? At that time, 20% down sounded like such a monumental amount of money. But I remember I didn't actually do my first joint venture partnership till much later, till I actually walked away from real estate for a bit. I did a master's program in another city. I got connected with some extended family who had some interest in what I was doing in real estate. So it was funny, a master's degree in a completely unrelated field is really what kickstarted my real estate career. I recently just did a joint venture with another student from that master's program as well. So I think the thing with doing joint ventures is, not only can you bring a lot of value to people and you actually see the value you bring, but also, you're helping fund someone else's retirement. You're helping fund someone else's education, and you're giving it back in a way that's so great for another family, and you get to win in the process. So it's the ultimate win-win partnership as long as you do it right. But, if you're the type of person where you're even in the position to do a joint venture, it's probably because you know what you're doing. So you should kind of just trust what you're doing and move forward with it.
Yeah. So if somebody's watching and they've done, maybe they have some of their own properties and they want to start scaling and getting that outside capital, how would you suggest somebody go out and find a money partner?
Yeah, I think there's a lot of ways to do it, right? So first is people actually have to know you invest in real estate. So for me specifically, when I first started doing this, I always kept it hush hush. Like, I did not want people to know I was investing in real estate because it just comes across as a very braggadocious type conversation, right? You don't want to say, on this age, I own all these properties, I'm trying to act like some kind of big shot, whatever it is, right? So I would say, unfortunately, you're going to have a lot of conversations about real estate. And also, you should just be helping everybody with their real estate. Oh, you need a great lawyer, you need a great plumber, you need a tradesperson, whatever it is. If you're becoming a resource and a go-to person for information, that means you're kind of indirectly starting to build a brand for yourself. Yeah. So I think immediately you want to be having a lot of real estate conversations, building that brand. And then let's say you do have a little bit of interest and you actually get that type of conversation with a potential money partner. The best thing to do for me that's worked well in my experience is you want to show them what they missed out on already versus projecting ahead. So I'll just show them, here's the 5 deals I've already done by myself. Here's your exact return right now today, had you put 20% in and been the money partner on each of these deals. And if you compare that to a really strong stock market portfolio of 10%, something like that, I just show the projection comparison right there. That alone usually tells the story. And then, then it's just teach them the basics. Once you have someone, who's interested in doing that, I think the next step is you want to create some kind of letter of intent. So you go, okay, well, there's this type of investment style in this area. There's this type in this area. Here's a few properties in the market that might fit that investment style. And you let them decide, know what, we're more, we like the duplex or single family duplex conversion more than we like, these 4 plexes in the sketchy area of town, whatever it is. So let them decide their investment, sign a document together that says, you know what, we are going to buy a property in this price range in this area that rents for this range of dollars. And that way, when the property comes up, the person's not panicking. They're not second guessing everything because they've already pre-agreed to this exact type of property and you went out there and you found it. So I think there's a lot of layers to it, but I think those are the main things: is build your reputation so you can even be in that conversation. And then there's that, show them what they missed out on, followed by that letter of intent so everyone's on the same page.
Yeah, no, those are some really good tips for somebody. Thanks for sharing that. So out of all the deals you've done so far, is there one that really stands out as a keystone deal that really propelled you forward?
Yeah, I think so. It was, I started off, my first purchase was, a brand new shiny condo. Don't recommend that to people. I was lucky to be at the point in the market that we were in when I purchased that. My second deal was a little bit more ambitious, bought a single family home, needed some renovation. And then I started doing, the duplex conversion, single family duplex conversion. But it was, I guess it was my 5th deal. And this was really the game changer. It was the first time I did a BRRRR, and I wasn't even trying to do a BRRRR. So it was completely indirect. So I remember I bought this property and, it was listed on the commercial MLS by mistake. And my realtor had sent it to me and said, hey, this is a great property. You should have a look at it. And it was just such a unique 4-unit building, double lot, big parking lot. They're all 3-bedroom units, over 1,000 square feet. Would look to be like a digestible price point in my city, something we'd really never seen before. And so the first thing I did was I had all the relationships in place. So I called my mortgage broker at the time. I wasn't a mortgage broker. And I said, hey, would my last joint venture partner be approved to refinance our other property to purchase this one? And then it turns out they were. I had a viewing the first morning, and I called my joint venture partner and I said, hey, I have somebody else who might want to come in on this with me, but I want to offer it to you first. It's one of the best deals I've seen in a long time, blah, blah, blah. So whatever, the property was in offer competition. The tenant profile was one tenant in the top unit, had lived there 12 years through 3 owners and had like an existing beef with the existing seller. His son had moved into the second unit. He had lived in that unit for 5 years, and the other son had moved into the third unit. He had lived there for 3 years. So, this family thought they owned the house. Like they probably thought they owned the house, right? So the situation there was, that one took a lot of courage because I never evicted a tenant before. Sorry, I got to decline this call here. I never evicted tenants before. I knew that was going to be the strategy on this one. They were paying literally like half of market rent. So they were paying about $800 a unit. I thought these units could maybe get $1,200, something like that. Yeah. So anyways, long story short, we bully offered the property. We did $50,000 over ask. Scariest property I ever looked at before. And then we ended up getting it. So one of the conditions was the realtor had to submit an eviction notice, but they didn't have to guarantee vacant possession. So it's just, we're not going to put the onus on you to guarantee vacant possession, but if you can slip the notice in and then maybe they leave on their own accord, that's great. So of course I'm driving by the property like weeks before the close, just seeing, nothing's coming about, things like that. And then what ended up happening was I drove by literally the day before the close, and there was just moving trucks everywhere outside this property. So I got like a great miracle. 2 of the 4 units moved out. And then I didn't have a contractor set up because I didn't know if they were going to move out. I know what was going on. So I said, you know what, I've watched a few renos before. Maybe I could general contract this whole thing myself. So I, floors, bathroom, paint, doors, light fixtures, electrical, everything. Oh, it was the most stressful probably 4 months of my life, general contracting this renovation. And I was starting my mortgage business at the time. So luckily I was self-employed. At the same time, I didn't have a lot of funds coming in because I was beginning self-employed.
Yeah.
So long story short, we ended up kicking out a third tenant who's like, she was bad too. Her boyfriend got arrested at the house. All this kind of stuff happened. And we did 3 units for just over $30,000 with me buying material, me hiring trades guys, firing the bad ones off the site, all that kind of stuff. And so we bought at 580, put in just over 30,000 rentals. So you're in at 610, and just decided to refinance. And then we didn't know the appraiser. We didn't know anything. Only one bank would do the file, and it appraised at 760. So we got 140 back. Our down payment was 120-ish or a little bit less plus the 30,000. So we almost got everything back on the refinance. So that was the deal that I think opened the light bulb for me, where it was, oh, sweet, I can get amazing cash flow on a property, all my down payment back, and continue to buy more. Of course, this is the way I have to proceed moving forward now.
Yeah.
So that was kind of the big deal that changed all for me. Since then, I've done another fourplex, just bought another duplex conversion with a partner. So right now, kind of what it's led me to, it's just kind of got me in the perspective of trying new type of deals. So now, like, I'm looking at a property pretty seriously. It's a 6 unit in Windsor, and it would be a perfect Airbnb based on all the data and all the numbers. So that'd be another new project. But now I have the confidence I could take on those kind of things, because realistically, it's not rocket science. Real estate is the easiest business that's very profitable. And I think, once you get started, you really see that.
Yeah. So are you at the point now where you are able to call up one of your past investor partners and say, hey, listen, like, I just saw this deal, we're going to do it, kind of thing? So
the one I did the fourplex with, that was our 3rd deal together. And we're at that point. She's actually probably more aggressive than me, where she'll like make fun of me if I'm penny pitching on a deal, right? So she's the perfect partner because she trusts me 100%. She encourages me, but she also like is aggressive but likes to be hands off, right? So I would say like that's the ideal joint venture partner. But some of the new ones, we'll see how their attitudes evolve after 1 deal, after 2 deals, right? I'm doing a deal with right now with a couple where it's their first time doing investment property, right? So there's things that I do for them that maybe I wouldn't do for a past partner, like give them a schedule of everything that's going to happen for the next 12 weeks between appraisals, renovations, tenants, all this kind of stuff, right? Whereas with my first partner, I wouldn't even have a conversation. They've never seen any of the houses, right? Yeah. So there's just different strategies there. I think, being on the mortgage side, I get a good insight into the joint ventures finances. So I know when they're going to be tapped out or when they're going to be available. That's a big benefit for me. So I think if you are looking at doing joint venture deals, you need a broker who understands how JVs work, so they can give you and your partner the heads up of, hey, like, they're going to be able to refinance that after, or they're not, right? Because so there's things to look for. But now I'm just at the point where I'm trying to handle the partners I have. I have money available with one partner. It's finding the deals. Like, it's just finding deals is always the challenge. And then, if anyone's tapped out of resources or mortgage approval room, then I'll start bringing more partners in.
Gotcha. So in terms of where you're at now with your real estate portfolio and your goals, like, would you say you're like a quarter of the way there, halfway there to achieving your goals?
It's tough to say. I think that, like I was mentioning earlier, the goals are going to keep evolving. I think the mortgage business has been a really, really healthy distraction in my life this year. I took my income to a level that it's not even been close to in the past at any previous job. So it's a little bit different when that happens, because, you start to look at, other things like, vacations, things like that, the shiny objects. So I'm trying to avoid that as much as possible. But I think, being close to my goals, like for me, the goal is about generational. So for me, it's kind of, I don't want to have to use the properties. So how can I live off whatever I have going on, whether I need to scale my mortgage business better or whether I need to scale the properties better? That's what I'm trying to figure out right now, because I don't want to have the properties. Like, I would like to give down the properties to the next generation with a list of rules saying this is how you have to operate it, right?
Yeah.
That would be the ideal situation. But I think, like I said, when I started, 5 properties would have been my goal. Now in my head, 40 properties is my goal. Maybe I'm going to get to 12 or 15 and go, this is ridiculous. I need to get buildings, right? Yeah. So, it just really depends. How's technology going to impact the mortgage industry? Maybe that's going to change my job. Like, a lot of different things are going to happen. So I try to focus on the 1 to 6 months goals as opposed to the far out ones.
Yeah, that makes sense. So how has getting into real estate investing changed your life?
It's literally been the baseline for everything in my life. I'd have to say, because I would say, like, there's a confidence you carry with yourself when you're financially okay. And when you have a bunch of equity in property, like, that, okay, I could sell a house tomorrow and go traveling for 5 years, right? So that's a luxury that not everybody has, right? But I also say it just makes me approach everything a little bit differently. So I did a master's degree. I would have never done a master's degree had I not had equity in property to pay $40,000 tuition for a program like that, right? So it helped elevate me academically, right? The investing background has springboarded my success as a mortgage broker to a level that could have never happened had I not had this. I wouldn't have, the legitimate confidence in a conversation with a 40-year experienced realtor unless I personally had experience in the industry, right? As a first-year broker, things like that. And then it launched this career, because I would have never chose this career path had I not had a real estate background. So I would say it's really kind of changed everything for me, because, I'm trying to get my parents involved. I'm doing other real estate investing activities like private lending with my own money, which I'm more confident to do because I know how to analyze the deals. So I'd say, if you're looking to get into any type of profession, what makes real estate so great, outside of kind of like the fundamental returns based on leveraging, is really just how it applies to your day-to-day life. Like, knowing everyone needs a place to live, having a really, really good understanding of real estate is just going to benefit you from a basics perspective just from that alone.
Yeah, no, that's so true. So Jacob, if somebody's looking to get in touch with you, learn a little bit more about what you're doing, how can they get a hold of you?
Yeah, so you can find me on Facebook. My name's Jacob Perez. Also Instagram at Jacob Perez 10. I post a lot of LinkedIn articles, links to things like that, YouTube, things like that. So I'm kind of out there putting out as much content as I can to help investors in Canada specifically. I know up here, the information doesn't always translate to the US. US doesn't always translate to Canada for the kind of like the nitty gritty fundamentals. But I think kind of the higher level concepts really still apply everywhere. But I think, hit me up on Facebook. I'll accept anyone's friend request. Instagram, same thing. And if it's just a general conversation, just to assess where you're at, happy to do that. We do portfolio analysis for all our clients, let them know, okay, here's what I would do with this amortization if you're looking to buy next year. There's a lot of different ways that you can leverage the portfolio to help you grow a little bit faster. So if you're in that 1 to 2 property range, or 3 to 4, and you're looking to get a little bit ahead, you'd be probably the perfect client mix to give me a call, and I'd definitely be able to help out.
Oh, that's great. Perfect. So Jacob, just want to say so much. Thank you so much for taking the time to share your success with us today.
Thanks for having me, Seth.
Yeah, you're very welcome. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.